Ahead of implementation of the Nigeria-UAE Comprehensive Economic Partnership Agreement signed in Abu Dhabi, the business community has begun counting gains of the partnership as experts harp on the need for reciprocity and balance of trade.
Nigerian exporters will have over 7,000 product lines from agricultural products to pharmaceuticals that will enter the UAE market duty-free.
Now, for Abu Dhabi, that has been able to now develop its economy into what you can call world class. Now, their goods and services will be very globally competitive and acceptable. Now, are we able to also now reciprocate in the same manner? Our goods and services, and mostly this will come from the agricultural subsector, because that's where I think we'll have comparative advantage over them. And then, if we're not able to now meet their own standards into what it is we are also going to be taking to them, it might not be very balanced. But I think what's important is a good opening. Kudos must be given to government, for what it is I've done thus far.
Well, from that monumental deal talking about the Nigeria and the UAE agreement being signed, let's look at other news in the United States of America, where consumer prices increased in December, lifted by higher cost for rent as well as food after a government shutdown had artificially lowered inflation in November in the last 12 months through December 2025. The consumer price index actually advanced at 2.7%, matching November's gain. President Donald Trump said the December inflation figures supported his push for Fed Chair Jerome Powell to cut interest rates. Meanwhile, the Trump administration has opened a criminal investigation into Powell, which the Fed chief called a pretext to influence rates. Now, this has implication on the Nigerian economy. This is as Nigeria is sensitive to the U.S. economic shifts due to its reliance on the U.S. dollar for oil exports and imports, as well as its need for foreign investment. From an expert point of view, if the Federal Reserve leaves rates unchanged as expected this month and eventually cuts them later this year, the US dollar usually weakens. A weaker dollar generally provides relief for the naira, making imports slightly cheaper and reducing the pressure on Nigeria's foreign reserves. And on the flip side, the criminal investigation into Jerome Powell creates political risks. If investors lose confidence in US institutional stability, they may flee the dollar, which could lead to wild fluctuations in global currency markets, making it harder for the Central Bank of Nigeria to manage the naira's value. And looking at foreign portfolio investment, it is also a fact that the U.S. interest rates act like a magnet for the global capital market. If the Fed keeps rates high to fight the food and rent inflation mentioned, investors are less likely to bring money to emerging markets like Nigeria. But if the pressure continues and there is a cut in the rate, it means higher yields for Nigeria, which is about 27%, becoming much more attractive for foreign investors. Now, a quick look at the markets. At this time, Nigerian stock market actually closed today. The markets in Nigeria, in South Africa, as well as Namibia are telling a story of early year optimism tempered by institutional shifts and global political jitters. Talking about it's been a bullish run in Nigeria, as the NGX is currently the star of the region, continuing a historic rally that began in early 2025 with the 106 trillion mark today. The all-share index gained another 0.56%, closing at approximately 166,771 points. While the Nigerian market is sprinting, the Johannesburg stock market is experiencing some turbulence as it saw a marginal dip of 0.09% today, while the Namibian Stock Exchange is currently the quietest of the three, reflecting a cautious post-holiday return to business, dipping slightly by 0.22% today.